we live? Let me know. Let me know. You guys will have to like watch the chat because I don't have it up on this one. Normally I have it up on the bigger monitor. Sup everybody? Can you guys hear us? External microphone. That should be it. Let me know. Anything? Can you hear me? Yeah? It works? Mic works? Yeah? Can you hear music? No music? That's all we needed right there. All right. We're full go. All right. All right. Full send. OBS on. Minimize. All right. We should be good. What's up, everybody? Duck live from the road. ATL. Bitcoin. Fuck. Look at that nastiness. I haven't looked at this all day. Look what you guys did. Look at this. This is crazy. All right. So, always back out, right? Zoom out, get perspective, figure out what happened, right? Okay, so bigger picture here. Cipher, right? This is what we've been watching the whole time. Nothing really changed yet. Check it out. Cipher draws over 786, right? 786 right here. Did the cipher really change, or did we double bottom at entry? I think we might have double bottomed at entry. I don't think anything really changed that dramatic. I think we went up. We found our resistance point, which was previous overhead here, March 20th, here, April 2nd, and again, May 8th, right? We had an alert even set there. Missed it by like, I don't know, fractions, right? By a hair. Okay, so you were up in this area, you sold off. Why, right? Why? Why did we sell off? What happened? What's the catalyst? Was it the news? Was it Elon? Of course it wasn't Elon. Why would you guys ever think it was Elon? That's fundamental analysis, guys. We don't do fundamentals. It means the technicals must have been there, right? If if the technicals were there, then okay, we should have some kind of signal, right? We should have a signal. Okay, let's look at something. What are these two lines right here? Okay, these were critical overhead resistance lines we had drawn. 60K, right? Critical 60K, psychological round number. Does it mean that we can't still get to 63? No, we can still get this zone. This cipher is not done. By any means is this done. No, this is just a double bottom, right? So what happened right here? What happened in the middle? What's the catalyst for double bottom? Okay, zoom in. Catalyst. Let's check the fibs. Okay, so what are we gonna do? Clean it up. I'm gonna leave you one line. Okay, we're gonna dissect this all the way back, break it all the way back down. Okay, because that's kind of what we have to do here. You got one line on the chart. It's basically 60K, okay? So, golden retrace zone, 382 to the 618. Fib from high, swing high C, swing low D. What happened? 618, golden retrace. simply said that was enough. And why? That's still not the full story, right? But that's very significant. Golden retrace was achieved. Okay? So when you entered here on April 25th, your golden zone was here to here. You achieved the golden zone. Traders do take profit, okay? So again, that's not enough though, right? That's an area of interest, okay? Area of interest for sure, right? Golden zone 618, okay? But we need more. So what happened? What was it? Zoom in. MACD. Let me show you something. Zoom in, zoom in, zoom in. You have to zoom in a lot of times. This stuff is very subtle. Very subtle. Extremely subtle. Okay? So let's start back here on May 6th. Double top on the MACD. Equal highs. Okay? Mind you, when we go back to the chart after this, Bitcoin is going to be painting higher highs on price, okay? But you are only able to muster equal levels of positive momentum, okay? So when you have equal levels of positive momentum, but you're putting in higher highs on price, you're starting to build somewhat of bearish divergence. It's just not as clear at this point, okay? So keep that in mind, okay? So we were just doing that to identify that these highs were equal, okay? Now, we're going to switch from trend line to polyline, okay? Lower levels of positive momentum, lower levels of positive momentum, lower levels of positive momentum, okay? Now, follow along. Let's go to price. Let's align this with price. Back out, back out, back out. Okay, we just painted this area, okay? So we have a high on price at the first island, right? Match it up down below. High on price, slightly higher high on price. Second island, equal highs. Third high, equal high, basically. Equal high on price. Much, much, much significantly lower levels of positive momentum. Equal highs on price. Next, much, much, much lower levels of positive momentum. Again, lower low. Trend reversal, 618, back tested, golden retrace. 1, 2, 3, 4. Can't even see the positive momentum. It was so weak. Dump it. Where'd you end up? Double bottom, 786, cipher. Just reconfirming that the cipher is the cipher, giving you a second shot at entry, which we often do, because it's never the first time. So right now, if I were to show you a lot of other assets, even Bitcoin right now itself, on the current drop, you're only seeing the initial impulse. You still don't even have confirmation on the lower time frame, even though you have it on the 4 hour. So we must still watch out, okay? What are we talking about? Same thing here, right? You had an initial impulse down, 618, back to entry, okay? So let's zoom in again. Initial impulse down, maybe we get a 618, back to entry, right? So from high to low, golden retrace, 382, 618, current levels of interest, okay? If we get the top of this 618 and we show low time frame bearish divergence again, you're going to sell off again, okay? You're going to go here, you're going to go right here. Maybe slightly lower low than the previous just to create the bullish divergence. Sweep the lows that had a stop right at the low. Sweep you just enough to leave without you, and then we go. Okay, double bottom up here. Or I mean, SR flip up top. We end up at 63.3 anyways. All we did was leave everybody behind. Eventual targets hit. Spot traders still win. Everything else was noise. It was always there all along. But TA is a myth, right? TA doesn't work, I guess. That's what I hear anyways on the street. All right. So that being said, look for a possible low time frame square up, right? Look for these levels, low time frame square up, previous what was once support becomes resistance. As you hit the square up, you hit the 618, you sell off again, you finally reset, you really find a double bottom within a double bottom, and then, and only then, maybe is it time. There's always one more low, right? You always have to watch out for that. And it really didn't even change anything. It didn't really invalidate the scenario. All it did was just wreck the over leveraged, the over positioned, the really tight stops. But even if some of you were again still long Bitcoin, really, what's the worst that would have happened here? You were in from entry here, you got stopped out back at entry, right? You're not really affected other than you just have to look for a re-entry. But on other assets, for example, Ethereum, we had already taken profit, right? So how could you possibly get hurt on something you just finished taking profit on, right? Several times we've already traded this here, and again last night we did it again. We had an entry that ETH finally painted that 4 hour bearish divergence, right? From this high to the higher high. We went to the 1 hour just because we were looking at previous lower time frame stuff. But here on ETH, basically, I mean, it's like that. It's when I tell you guys, it's really hard to see bearish dragons unless you invert the chart. So if you invert the chart, right, it's easier for you guys to see it visually, right? Where you have the spine, you have the double bottom, right? Where you have these lows and other slightly equal lows, right? Double bottom. Then you painted your neckline, right? You back tested that neckline. Break, hook, go. Tell me you didn't break, hook, and go above a double bottom of a dragon, bullish duck. The only difference is it was bearish, so you couldn't see it. Gets you every time, right? Fuck, that sucks. But not for us. We were good, right? We saw that. We saw it coming. Why? Because we said we had a high on price and we had a slightly higher high, almost equal high, and we had nothing. We had nothing on the positive momentum when we painted that slightly higher high. There was nothing there to support it. That's the worst form of bearish divergence because you couldn't even muster any sort of positive momentum as you built the bearish divergence, right? Not only did you build the bearish divergence, but you built it at the double bottom, which is the double top of a bearish dragon. Coinciding variables at a pattern completion zone. The pattern is not always a harmonic. Sometimes it's a double bottom, sometimes it's a head and shoulders, sometimes it's a three rising valleys. They're all still Bolkowski patterns. We just prefer harmonics because they're 5-point patterns instead of 2-point patterns. They're more powerful, but they don't always present themselves. They're like a diamond in the rough. Every shovel isn't a diamond. Sometimes you get a little gold, a little silver, a little copper, right? You still make money, but the diamond's the diamond, right? So we gotta capitalize then. But right now, nothing on this 1 hour tells me that it's over. All that we currently see is convergence bearishly, convergence bearishly, convergence bearishly. Give me my double bottom. I'll take some more right here. Thank you. Then we go. This point, you'll have lower levels of negative momentum. And at this point, you can paint, gross. You can paint bullish divergence now, right? You need that slightly lower low in order to do so. That's what the double bottom is for. By the time you do it, the buying is going to be there because people are now aware that a dip is present. More buyers step in, slightly higher low, much lower levels, even equal low, even slightly lower low. They're all Bukowski double bottoms, right? Really, we just want to get back into this optimal area we've had previously from forever, right? Excuse me. Let me do that again. Previously from forever, right? It's right in the buy zone. Look for the double bottom, wait for the divergence to develop. RSI still not oversold, right? RSI still has much more room to go before we find the double bottom in oversold territory, not in the mid ground, right? So that's Ethereum, Russian Ethereum. It's a shitcoin. It's a Ponzi scam. Okay. Russian Litecoin next. All right, guys, what happened? We have a pattern. We had a low. We had a slightly lower low. We put in a higher low. Inverse head and shoulders-esque price action. Neckline, break, hook, backtest, go. Measured move, hit, sell off. It's over. Lower low, lower high, sell off again, right? On the way back down, you don't want to see. How did I do that last time? Last time I pushed a button, it made it shift to the top like that. So I don't have to manually drag it. It was sick. All right. I forgot how though. Okay. Cheat sheet. Okay. We had a high on price May 10th. Lower high May 12th, right? Significantly lower high. We don't like painting lower highs. We like painting higher highs. Like here, we had a high, higher high. When you get a lower high, that's a potential change in the trend, right? A neckline-esque price action, back test, break, hook, go, right? Again, hard to see. Better. Okay, it's always the same. You just watch on the way up, higher lows, right? Higher lows, higher lows, higher lows. As soon as we paint a lower low, we watch out because then we paint not only a lower low, but a lower high than the previous high. So you had a lower low and a lower high reversal. You had a bit of a square up area as well that happened here. So pretty much that's a square up. You failed. Yes, you failed, but that's because the macro failed, right? Ethereum, Bitcoin failed. Didn't give Litecoin quite its chance to get there. Fib from high to low. Failed at the 786, right? Just shy. This is why we layer. This is why you front run. Anyways, we didn't really care about that. Why? Because we were in from here and we sold here. Now it nukes. Now we double bottom. We enter again and we go again, right? So we just wait for our edge to develop again. How do we develop an edge, Duck? Oh, wait. Is that a spine forming? Oh, it is. Whoa. Can I potentially get a double bottom and maybe paint a neckline, maybe break it, backtest it, go, break another one, backtest it, go, maybe hit a target area? Very possible. What would that look like? 1272. Oh, look at that. 1272. Yeah, sorry, I had to take a rip. Double bottom. That's the next thing you're on, right? If you scalped in, get out. Trail to stop. Double bottom, re-enter. Go again. Again, we're looking for the divergence, right? We need to build divergence. How do we do that? We need a slightly lower low, right? Just slightly. That would be ideal AF. Slightly lower low than 297, right? Just give me a wick, just a little one, just a tip, just under 300. for a split second. That's all I need. It's all I need. Confirmation, buy me back up immediately, hold above, and it's on. Okay? It's all we need. And once we get it, we know we just can't invalidate it, right? So, yeah. All right. Next asset. Dog. All right, guys. We talked about this. Go back a stream or two. You're going to see it. The difference is, let me show you how you're going to see it, okay? You like that? Remember this? Remember when we said dog put in a low, right? But the problem at this point was your harmonic was still up here, right? This was your current low, 7. We said Doge, Elon scam, Ellen coin, made a 70% retrace, right? But what do you need on a bearish cipher where you have a 1272 higher high? You're looking for a 786 at the D long entry target area, right? We had made a 7. So what did we say here? We said, oh, can we maybe paint one more slightly lower low so we could paint the divergence? Whoa, didn't we just talk about that on Litecoin? Yeah, it's funny how that works and what we're looking for. So in order to do that, we said, okay, let's layer out here and leave some orders in the 786 area, right? Okay, so we proceed. We move forward, fake out, scam, noise, fill our entries, right? Boom, boom, boom. There it is, 786. Okay, entries filled. Let's readjust the harmonic, right? 786 right here where traders settled up. Okay, yes, you had some scammage. That's why we layer below it, right? We don't care about the scam wick below. We care about the follow through price action. What are we getting? Follow through price action, right? And a little more. Okay, so what happens? Bullish divergence should paint where we have a low and then we have a slightly lower low, right? Did we paint it? I don't know. Let's find out. I feel like I need to delete this. There. Okay. Doop. Oh, would you look at that? We have we have heavy levels of negative momentum. I'm not sure what word I was looking for there. Huge ass island of negative momentum, followed by very, very, very small little baby island of negative momentum. Okay? Very clear bullish divergence, okay? Where you have the low levels of negative momentum followed by higher levels of negative momentum. Same time, lower low on price, follow through price action. If you get it, double bottom at the completion zone. Stop below a quarter. We've said this. Previous neckline acting as current support, protection from your stop. Still have orders layered that weren't filled yet. Leave one behind. Save it for later. If it doesn't fill, so what? We're already 80-90% in. Already filled. Already in profit. Do what you want with your stop at this point, but I'm going to wait for a double bottom. But I mean, technically, if you want, you could already be trailing. And your stop is in profit. Again, bullish divergence on the MACD. RSI is the only thing lacking, which is why we may get that slightly lower double bottom again, right? Double bottom within the completion zone, paint the RSI divergence, and then go, right? Where we would put in a slightly lower level on price with higher levels of relative strength, right? So how would that look on price? You would sell off just enough to just put in a slightly lower low, paint the divergence, and then you go, new neckline, break it, back test it, new neckline, break it, back test it, existing overhead resistance, break it, back test it, ultimate target area on the dog is still 90 fucking cents. Jesus Christ. You guys are out of control. Taking dog to a damn dollar. Can't even take you anywhere. This is ridiculous. Look at this. You guys doing? But yeah, that's what's happening. Either way. Like it or not, it's coming. Don't fight it. Just accept it. Alright. Cosmos, ATOM, 1272, bearish butterfly, back testing previous, what was once resistance as an overhead neckline is now for the second time being back tested as support. Rule of three. What does rule of three mean? Rule of three means you probably hold up once, you hold up twice, right? You hold up twice. That allows you to get some rally. But when you come back down for that third time's a charm, oh, it's over. You're going to do this. So, yeah. Even though dips, like bounces are cool and all, don't get it twisted. If that touches $22 again, it's probably over for ATOM, okay? So you want to stay away from $22. What also does that tell you? Pretty clear invalidation point, right? I don't want to lose that area again, so I can use it as protection. Well, I'm pretty close to that line, giving my risk to reward a fairly tight stop and a forever ceiling, technically, right? So we just have to see as much as you can bite out of it, but you know, somebody taking a long in this area would have a fairly tight stop, right? Fairly tight stop. 3 to 1 is pretty easy to achieve in this scenario. Even 2 to 1 is at the initial square up area, which is probably your 786, 886. If you get that 1272, which is this overhead area, I mean, you're talking 3 to 1 is just sweeping the highs, which seems like should be possible at this point. 1272 is above that. Okay, above that 1272, which ultimately should be, ultimately should be where you end up, giving you almost 4 to 1 on your trade, right? Something like that. That's how you would size up ATOM. Again, you wouldn't want to lose 22, and if you did, you want to immediately get bought back up above it. And if you don't, and you see it be back tested as resistance, right? If this ends up being resistance here, you would immediately look to invalidate the trade, bail. AVAX. Textbook bearish shark morphing into bullish 5-0. Alert. 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 Okay, here it is. It's been circled already, pre-circled for you. 113 D, short entry target, bearish shark. You're retracing down into the 50% fib level. You've hit it. You're now just looking for double bottom confirmation, which you basically already have. You see this? You see this right here. You basically already almost have your double bottom confirmation of a bullish 5-0. And look, I mean, you basically have already done the trade. You hit it, you almost completed it, you came back down, gave yourself a second chance, and now you're going to go again. It's like you could have done this twice. Shot one, whoops, shot one here, shot two here, okay? So anyways, this is how we take a bearish shark and we retrace 50% of the way. We double bottom at the 50. We morph into a bullish 5-0, and we run the highs. Okay? Keep that in mind. FTM, bearish shark, about to morph and is morphing into bullish 5-0. You just saw it. Okay? Let me do that for you again. Sorry. How come that did not work? AVAX. We must have skipped right over CRV somehow. Anyways, okay guys, watch it again. Bearish shark at the 113. As soon as you hit the 5-0, you're gonna bounce. You're gonna hit like a 618, 786, and you're gonna double bottom. Okay? Keep that in mind. FTM 113, bearish shark. You've hit the 5-0. You are now going to rally to the 618, 786, and you're going to sell off, and you're going to double bottom, and then you're going to rally again. Okay? Keep that in mind. Screenshot that image. From D high to the 5-0 low, 618, golden retrace, between the 382, 618, maybe you're lucky you get 786. Either way, you sell off, you double bottom at the entry of the 5-0, which is the 50% retrace from your previous C low to D high, 50% retrace. You don't want to lose this area, okay? But it's a potential another double bottom area for this trade, okay? So keep that in mind for future FTM action. FTT, wow, would you look at that? Bearish shark, about to morph into a bullish 5-0, okay? FTT, Sam's pissed. He hasn't texted me back all day. Been texting that fucker, nothing. He's pissed. I was like, bro, I told you I was going to short it. Don't get sad. You get sad. Sucks. Double top at the entry of a bearish shark. Retrace 50% of the way. Looking for a double bottom. Fill the 5-0. Send it back to the top. Paint a different harmonic. Can you already see it painting? X, A, B, C, D, whatever you get, right? It just keeps coming. It's just wave analysis after wave after wave after wave. Market will provide you endless opportunities to enrich yourself if you're just patient enough to wait for it to develop and not reckless enough to self-sabotage it on the way there. But it'll always be there again and again and again. So, yeah. We just want to go live real quick because Duck's been on the road. I know you guys had a rough day out there. So, wanted to get you a little action. Feed the vein, feed the main vein, feed that bloodstream. So, yeah, I hope you guys like the stream. I know it's kind of quick, but we're working on the road with minimal tools. So, you get what you get. But, yeah, we're also pretty drunk. But, guess that's beside the point. So, yeah, have a good night, guys. I know it's kind of late. I hope I hit record for everyone that's sleeping. But if not, I mean, those that were awake and alert, take advantage. So, alright, fellas. Catch you guys maybe tomorrow, maybe the next night. But we'll see how it plays out.